This is how you capitalize on growing portfolios and not just dollar cost averaging in aimlessly. Okay. This is how you start to see 100% returns in your portfolio in the now while you're growing a bull market bag. This is how you start to see 1000% returns in your portfolio because you understand how to put money into this market properly. What's going on, everybody? Good morning. Good morning. Happy Memorial Day for those of you all who celebrate Hallmark holidays in the United States. In today's video breakdown, we're just going to be going over a weekly motivation, talking about risk, really understanding the market landscape in which we're operating in right now, the environment, the opportunity that's at hand to really educate oneself and properly get involved in these markets and be a market participant by assessing your risk properly and by understanding what we're living through right now, which is a once in a lifetime opportunity. It's not every single generation that we get to experience the birth of a new asset class. So people are sleeping on this stuff. We're going to get into that. So first, we're just going to discuss, while we let people funnel into this live, some weekly motivation, just reading you guys some snippets from the CYPRX private Discord via some of the community members and a post that I made to them this morning. And then we're going to get into last week's fundamentals so that we really understand why a cryptocurrency market pullback happened. Total cryptocurrency market dropped about 4.8% last week, and we have now seen a recovery. Bitcoin's at 70,000. Other altcoins are seeing significant price appreciation, especially in the meme coin niche. We had a nice call out to you guys publicly on the X space, where on the 14th of May, I mentioned to you all that I would be looking at buying Brett on the dip. We got in at around 4 cents, and since then, Brett has appreciated over 120% in value, flipping a nice bag, turning like $4,500 into almost over 10 grand publicly for you guys on X and also in the private CYPRX community. So that was cool. And a little note from last week, really understanding these fundamentals and why I'm going to go over them. And then what to expect this week is because we projected the market pullback to the T on the CYPRX X space and in the private CYPRX community. And we've been constantly showing individuals that this is possible to do. It is possible to accurately understand market dynamics and macro fundamentals that affect price action and risk assets. We know that 95% of this digital asset ecosystem is controlled by trading algorithms right now. That is all set to change in the near future when these assets are actually used for their utility. But right now, that is not the case. So these assets right now that we're operating in the crypto space, they move based off of risk on and risk off sentiment. And so I'm going to go over that. I'm going to go over what to expect this upcoming week, especially if we want to continuously see this bullish momentum in the digital asset space continue, right? What we need to see this upcoming week, we have some key economic data to be focused on. So I'm going to go over that. We'll go over some price action, looking at the total cryptocurrency market cap as a whole. And then if you guys stick around to the end of this video breakdown, I'll spend a little bit extra time going over some XRP price action. All right. So that's what you guys are going to get staying on today's call. It might be a little bit of a longer one, but I'm just going to wrap off the top of the dome. So we're going to start here as people funnel in. Again, happy Monday. Hope everybody has an amazing week. Tomorrow is the official hard release of Wealth 28 Club DeFi University. So make sure that you are following us on the X space and on YouTube. Myself and Mr. Aquaman put a lot of time and effort into this, and we are really seeing a lot of advancements and improvements in individuals that have already pre-joined via the early bird release that has happened over the past consecutive couple of days. Improvements in their knowledge and their education and their mindset, and they're already making money in DeFi, which is just phenomenal to see. Don't forget, if you want to access that early bird release, we're not going to announce till tomorrow how many limited seats are available, but right now there is a limited amount of seats. We're going to cut access to the general public once we hit a certain number. And so you guys can visit CYPRXtrading.com to go grab yourself a seat. It's less than a cup of coffee. If you're spending, 2 cups of coffee per week, 4 times a month, right? So on and so forth. It's less than that. It's less than $1 a day. And we did that on purpose to show you all that we're building a community that constantly pumps out value, constantly puts out information that's giving individuals an edge in the market at an affordable price. Obviously, of course, people should be compensated for the time and ethic that they put into things, especially if they're providing value. And so that way you all can see that there are individuals in the space that actually care about other participants in the crypto space moving forward with them. And we're not just here to, get you to buy something and give you nothing in return. Okay. So hopefully we see you on the inside. With that being said, let's jump into the private Discord. I sent this message out this morning because I was reading through some of the general chat and I came across this outstanding message from Angelo 801 Trading in the private chat, where he went on to say that he paid for his monthly membership in 3 days, thanks to myself and the CYPRX community, which is phenomenal to see. This is like the 10th individual that has let me know that the information that we provide in the CYPRX community has paid for their monthly membership. He said that he's been here since September. So again, do the math, that's only a couple months, not even a year. And they couldn't possibly read everything that there is in the private community, which is insane. Thank you, he said to myself, Cypress. Thank you to the badass team, to the researchers, and to the institutional scalper, obviously, of course, the gentleman that gives us our delta zones. And thank you all of the badass traders that are part of this community that have helped me. I'm not there yet, but the knowledge that I have now, I'm not sure I would have figured out otherwise. So that was just really great, which led me to typing out this good morning message to the team where I said, although today is a holiday, I just wanted to deliver to you all a motivational reminder that you will not become successful if your life stays the same. Okay. Let me go on and share my screen for you guys so you can actually see this. I said, you cannot expect your life or circumstances or your situation to change if you yourself do not change. To become rich, to become wealthy, to become wise, you will have to take risks. You must take risks to be successful. These must be smart and thought out risks. Okay. You can't just be going out thinking, oh, I'm just going to risk it all and think you're going to win. You have to be playing chess, not checkers. All right. Society and most regular people are led to believe that things like starting a business or trading or investing are incredibly risky and difficult and or similar to playing the lottery. How many times have you heard that, right? Oh, you're going to get invested in meme coins, you're investing in crypto, you're trying to trade, you're playing the lottery, you're just guessing, you're getting lucky, right? Don't get me wrong, okay? All of these things do come with inherent risk. That is an absolute fact. Crypto's risky, trading's risky, investing's risky, starting a business, it's all risky, but they're all good risks, especially if you know what you're doing, okay? Good risks are risks that you can control with foresight and proper planning and proper education. So for example, in trading, we inherently involve ourselves in a market that is out of our control. Okay. These market makers, these algorithms, these individuals, these institutions with much more money than you and I, obviously, of course, manipulate and dictate the markets, the market movements, everything. But we on the opposite side of the spectrum can manage our risk properly and understand that we do have things in the market that we can control, like our emotions, our risk management, our position sizing, our profit taking, all of these things that allow you to build a strategy, again, that allow you to make good, educated, controlled, foresight, proper planned risks. Okay. And that's how you can get ahead. Now, not a lot of people understand this because, again, they're led to believe that starting a business, trading, investing, all these things, all is so risky. Oh my gosh. Okay. They don't understand that you can actually make calculated and educated risk and come out on top. How do you think banks have survived and thrived the entire time and the whole entire banking system has not collapsed? Because there is a risk mitigation team in a bank and financial institution, believe it or not. Right? As crazy as that sounds. Same thing in a big, large organization or business. There is a risk mitigation team, right? They understand that risk cannot be completely alleviated, but it can be mitigated. It can be brought down to an acceptable and controllable level, all right? And you have to understand this as an investor and a trader. And if I'm spitting facts right now, I'm telling you all, subscribe, follow, because we're taking this stuff to another level. All right. We don't flex money here at CYPRX, although we could. We don't flex profits here at CYPRX, although we could. We try to give value and education to take people to another level of unlocking these markets, regardless if you're a trader, if you're an investor, if you're a business entrepreneur, whatever your niche is. Okay. You can do it by being a normal person that seeks education. All right. So, moral of the story is, to wrap all this up, you don't need to spend your whole life limiting yourself now in the hopes of a comfortable future. You need to step out of your comfort zone. You need to be comfortable with taking risks and assessing your risk properly and making educated decisions. So again, the reason why I'm saying this is because individuals in the CYPRX community, they're thriving, they're benefiting. I can't sit here and say that every single person is, but that's because they're making a personal choice not to. And so you on the opposite side of the spectrum listening in on this call right now, regardless if you join the CYPRX community, Wealth 28 Club, whatever, we're not here to ask you to do that. If you want to, it's there for you. But what I am asking you to do is you take it upon yourself to push yourself, to educate yourself, to take and assess your risk properly, right? Understand the opportunity at hand. We are living through a digital transformation that is a fact. If I have to convince you that that is happening, you are not doing enough research. You are not educating yourself enough as to what is happening. There is for a fact a transformation happening. And if you don't want to get involved and you miss this opportunity, it is 110% your fault. I'm not here to tell you what to invest in, but I am here to tell you that this is happening. And I've shown that time and time and time again. Okay. So with that being said, let's jump in. Just a little bit of a motivational, speech to warm this up and get people in. So thank you all, 218 people listening. I really do appreciate all the love and the support. All the positive vibes, all the positive energy that you all have given CYPRX to keep the momentum moving. What we're attempting to do here and the international community that we are attempting to build, and we are building. I wouldn't be able to do this without you all, without the viewers, without the followers, without the individuals that actually see what it is that we're attempting to do for individuals by enlightening them. Okay. So let's get into last week real fast. And the reason why I'm doing this again is because we've been publicly addressing all of this accurately. I don't know if you guys have paid attention, but we're not here to make these massive, unrealistic price predictions. We are here to pick apart the market week by week for you all and show you the level of accuracy that you yourself can have if you understand inflow and outflow, order flow, risk on, risk off, fundamentals, and what these market makers and financial institutions look for when they're actually trading. Because again, until the trading environment that we operate in changes, this stuff matters. I'm a firm believer that eventually certain digital assets will be utilized for their value, for their utility, and that there will be a subsection niche of this crypto space that's still tradable and that still fluctuates with traditional assets and risk environment. Okay. But right now, 95% of crypto fluctuates in this risk on, risk off environment due to these fundamentals, due to optimism in the market or pessimism in the market, and so on and so forth. So last week, we accurately called this pullback down to roughly around 2.4 to 2. Give or take $5 trillion. And this was primarily due to us seeing that last week we could see economic resilience, we could see lower unemployment claims, we could see stronger PMI figures, and we could still see a robust healthiness amongst the perspective in the US economy. And we said that this would lead to an increased investor demand for the dollar temporarily. And it would look at this post. It's right here. This is posted on May 22nd. This was last week. I said it would most likely lead to a pullback in the digital asset space. Okay. Keep in mind, I also publicly announced to you all where I was buying in on Brett. We called this to the T and we understood why this happened last week. So let's just cover that so that way you all understand why in the total cryptocurrency market cap last week, when everybody else was bullish, think about this, okay? Everybody else midweek was bullish about Coinbase relisting XRP, right? Everybody was bullish about SAB 121 getting past temporary, or, it hasn't reached its final stages yet, but going through the process of getting approved, right? Which is super bullish for institutions onboarding into the space. But then why were the vast amount of whoever's in control of this market selling positions last week? Okay, again, this is how the market moves. So you can see here on Monday, just looking at the charts, Monday they were selling positions. Tuesday, Wednesday, they were selling positions. Thursday, they were selling more positions. It wasn't until Friday that whoever is in control of this market decided, okay, now it's time to buy. Now it's time to re-implement capital back into crypto. And now we're sitting at $2.5 trillion, Bitcoin's at 70,000. Why did all this happen? So that's what I'm going to get into today so you guys understand how we were able to accurately predict that this was going to happen. Again, it's not a major prediction, but it's how we are building profitable portfolios here at CYPRX. It's how we've gained an edge in the market, and it's how we are educating our participants, our followers, and our subscribers how to do this. Accurately, smart, educated, calculated risk by understanding the inflow and outflow. And if this sounds appetizing to you and you're tired of not understanding the markets, then tap in, okay? So last week, again, we're just going to cover these fluctuations in the market, what took place. And I have some screenshots so that way you guys don't think I'm making this up out of my culo. You guys think, I'm just spitting off the top of my dome. No, here are fundamental articles from Reuters, from Bloomberg, from Forbes, from Fox News, from Yahoo Finance, right? that are telling you guys these things. All those platforms I just named off to you, you all can go see this stuff for yourself. All right. So let's cover this. Last week, the total cryptocurrency market experienced a slight decline of about 4.8% from the start of the week until Thursday. Keep that in mind, because Thursday rolling into Friday, we saw a market turnaround. The market mood last week was primary risk off. This was due to hawkish commentary from Federal Reserve officials that weighed on risk assets. So let's talk about this hawkish Fed rhetoric, which dampened risk appetite, because this upcoming week, we have some extremely important data, and we need to see this rhetoric completely go away. We need to see lower inflation readings. We need to see downbeat economic data. We need to see weakness in the dollar in order to continue to see this risk on market mood that we've just recently seen over the past, let's just say 72 hours, continue. And we'll get into that. All right. So last week, we had Fed members, speakers like Michael Barr, reiterating things like disappointing inflation and how inflation is not providing the confidence needed to cut interest rates in the short term, and that the Fed will most likely need to have and allow more time for tight monetary policy to actually do its work. Then midweek, Tuesday rolling into Wednesday, we had the release of the FOMC meeting in minutes, which is different than the FOMC meeting itself. But again, on Wednesday, we had further reinforcements of the Fed's stance, with multiple officials stating the need to see more disinflation before considering rate cuts and their willingness to hike rates again. They mentioned that if inflation remains sticky and troublesome. Okay, so keep that in mind. That is still on the forefront if we do not see inflation come down. I don't think it's going to happen, but it is a possibility. And it's something that, again, remember I talked to you guys about at the beginning of this video, educated, calculated risk that you as an investor and trader need to consider adjusting to if it happens. Okay. So overall, this hawkish tone that we saw drove demand beginning of the week and midweek for the US dollar and reduced the demand for risk assets like cryptocurrencies. Okay. As the market started to price in midweek in the beginning of the week, a higher for longer interest rate environment, which creates a risk off market mood. And again, is one of the reasons why we saw a slight pullback and retracement in the digital asset ecosystem. You can see here. Here's Fed comments on Monday, hawkish comments. Here's the rhetoric from midweek, where the Federal Reserve went on to say that they're going to most likely keep policy rates higher for longer, that they have a willingness to tighten monetary policy further if inflation does not come down to their 2% mandate. And then rolling into Wednesday, Thursday's trading session, we saw a healthy labor market report with lower jobless claims. And we also saw healthy and upbeat PMI figures, right? This tends to strengthen the United States dollar temporarily, as it drives investor optimism to the dollar, because the US economy is still strong and resilient and still showing signs of expansion, right? You can see those reports here. I'm not making that stuff up. And so with that being said, these large financial institutions, these algorithms, these individuals with much more money than you and I that actually create these price fluctuations in the market, they were dumping on you all. When everybody else was buying up here at the top, right? Because they saw Coinbase relisted XRP, blah, 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 right? They were dumping on you. So people last week most likely bought XRP, manual retail traders that don't know what they're doing, bought XRP up here, saw depreciation in their portfolio, and were questioning themselves. We're questioning why they keep getting into crypto and buying tops. Makes no sense. Then Thursday rolling into Friday, the market rhetoric turned around, and this was due to fundamental factors, right? We had revisions in US economic data actually showing contraction, that economic expansion is not happening to a certain degree, and that there is still economic contraction, right? So durable goods orders last week got revised, which hurt the strength of the dollar. And then we also had inflation expectations come out lower than previous readings, right? So I wrote to you guys, and again, these are fundamental reports that we give to the private CYPRX community. On Friday, the cryptocurrency market got a break as the US dollar ended the day weaker, with lower inflation expectation figures and a revised durable goods orders report showing a contraction in the core durable goods orders, which weighed on the strength of the dollar and allowed for risk assets to recover some of its losses from the beginning of the week, right? So now you all fully understand why market makers were selling their positions at the beginning of the week and midweek, because of the risk off market tone and them starting to price in that we're going to be in an interest rate higher for longer environment. That tends to create a temporary, again, this is all temporary. This is moving with the fluctuations of the market and understanding that one day the market mood could be risk off. The next day, the market mood could be risk on. This is how you capitalize on growing portfolios and not just dollar cost averaging in aimlessly. Okay. This is how you start to see 100% returns in your portfolio in the now while you're growing a bull market bag. This is how you start to see 1000% returns in your portfolio because you understand how to put money into this market properly. So this is why the vast majority of the week we saw a downturn in crypto. Then to roll over into the weekend, right before the market ended on Friday, we saw some positive rhetoric with lower inflation expectations and downbeat durable goods orders, right? The durable goods orders, collectively speaking, came out upbeat, but the revision showed signs of economic contraction. All right. So this week, what do we need to see in order to see on the fundamental side of things? Because there's still positive developments we need to take into consideration, like ETFs that have been approved, institutions coming, regulations coming, just the infrastructure as a whole being built behind the scenes, all the things that have been and are going to drive the biggest utility super cycle, speculative wave super cycle that anybody has ever seen. It's going to be 10 times bigger than the last cycles, in my personal opinion. But in the now, how can we capitalize on this? And what do we need to see in the now in order to see the total cryptocurrency market cap rekindle all of its losses from April, where we had higher inflation readings weighing on risk assets, where we had geopolitical escalations and tensions that one weekend, I believe it was the 12th through the 14th of April, where we had the tensions in the Middle East weigh on risk assets. We saw gold soar to new all-time highs. Like, people don't even understand why gold hit new all-time highs. They just think, oh, it's gold. Oh, no, it was for a reason. It was because there was an investor appetite for safe haven and not risk assets, which is why we saw mid-month in April, the cryptocurrency market completely dump all the way back down into almost $2 trillion flat. This didn't just happen for no reason, people. This was all driven by fundamentals, by these algorithms that control the market seeing more of a demand for safer assets. And so we saw that order flow come out of risk assets and go into safe haven. But now risk asset appetite is back on the table. So what do we need to see that rhetoric continue? What do we need to see this bullish uptrend in crypto continue like everybody wants to see? Okay, I'm going to go over that today, but we're also going to cover the inverse, how to be reactive if we see a market downturn, and is that a bad thing? So let's talk about this upcoming week. So key US data in focus, navigating the overall market sentiment. This week, our main focus on the US data front, it's actually a lot, so bear with me. But the way I break it down, hopefully it's easily digestible for you all to understand. The US data front will be scattered, first of all, with Fed speakers and key economic indicators related to the strength of the labor market and inflationary pressures, which is extremely important because of those are two main factors where we need to see weaker labor market data and disinflation coming to fruition, bringing the Fed's overall goal mandate of 2% actually coming into fruition, actually happening. Okay. Those are two things that are going to allow the Fed to start to consider cutting rates, which we know, obviously, of course, lower interest rate environment boosts optimism in risk assets as it makes borrowing and lending easier and all these things I'm not going to get into right now. But anyways, okay. On this week, CB consumer confidence, Richmond manufacturing index, we have preliminary GDP quarter over quarter, unemployment claims. We have some other GDP price index figures, pending home sales, and the key economic metric this week, in my personal opinion, but just watch it unfold, will be on Friday with the core PCE price index, both month over month and year over year, set to come out. Okay. So let's talk about the two scenarios. The first one would be the one that is most ideal, the one that everybody here watching would most likely want. That is a risk on, again, I'll say that, risk on market mood. That means we see crypto flourish, bullish, risk assets like euro, GBP, bullish, up against the dollar, right? We surpassed $2.6 trillion in the total cryptocurrency market cap. All of our bags are fat and everybody's in the green and everybody's happy. Okay. That's the scenario that we're first going to walk through. And we're going to take a look at the charts, maybe even just dive into XRP now and see what that would most likely look like in the form of trade ideas and price fluctuations if this scenario came into fruition. So what do we need to see in order for a risk on, market mood to happen this week? We would be looking for the following things. We would need to see lower than previous consumer confidence figures, downbeat Richmond manufacturing data. We would need to see GDP showing signs of contraction and not expansion, coming out lower than previous readings and indicating economic slowdowns in the US. We would need to see higher unemployment claims, signaling weakness in the labor market. And the most preferred economic data report this week, we would want to see a decrease. Okay. We want to see disinflation in the core PCE price index, both year over year, ideally, and month over month, demonstrating continued disinflation in the overall economy and coming down to the Fed's goal of 2%. Okay. So if this one sided scenario does unfold with economic data pointing to a slowdown, a weakening in the labor market, and a decline in inflation, that would be just the most ideal scenario. I'm telling y'all right now, if all those three things happen, crypto's going to fucking pop. Okay. But again, this is not a rainbow world. That is what we would want to see. But this is not some fairy tale rainbow world. Okay. But that is the best case scenario. That would be phenomenal. Right. If we can see that, then most likely what I'm projecting is going to happen, again, downbeat data, lower labor market figures, disinflation, all of this boosting optimism in the markets, the market gripping onto the rate cut narrative, right? Seeing the CME Fed watch tool increase with the rate cut expectation percentage, all of that would boost risk asset and most likely weigh on the dollar, weigh on the strength of the dollar. All right. So if that scenario happens, most likely we are going to hold this higher low that the total cryptocurrency market has created just most recently at about 2.4 to $5 trillion. These are the scenarios that I would be looking for. A possible slight retracement as market makers start to sell some of their positions, just in case the inverse of the data happens. The data actually coming out in favor of risk assets. Scenario number one would be a double bottom formation at this $2.4 trillion range and a continuation move higher, breaking back above the April highs and completely engulfing and encompassing all of this downwards momentum that was created in April with higher inflation readings, risk off market sentiment due to geopolitical escalations and tensions, and upbeat US economic data. We would most likely correct all of this previous downwards momentum, and we would see crypto back above $2.6 trillion. If it holds, I'm not here to debate that, but this week alone, rolling into the weekend, if we see downbeat US data, downbeat US labor market figures, and disinflation, all hugging and gripping onto the fact that the Federal Reserve could potentially cut interest rates, the market holding on to that idea, this is the scenario I'd be looking for. Scenario number two, some possible consolidation at these highs right now at about 2.5 to $2.6 trillion, and then a breakout continuation move again to completely engulf the April highs. On XRP, if we can see this one-sided upbeat market optimistic mood risk on, and as long as we can hold above the 50-cent threshold, the two scenarios that I'd be looking for on XRP, again, would be a slight retracement for market makers to catch better buys at a previous discounted area to see the bull continuation move happen. Possibly, again, if we think the total cryptocurrency market cap is going to rekindle its losses from April, we can assume, based on the ideology, that XRP is going to follow the rest of the market and tends to do so late in the game. It usually is a last mover. Well, you can see here, this is where the sell-off really started to happen in April. And you can notice that at the same time, the dates correlate. This is the 12th of April. This is the 13th. This is that weekend that we had those geopolitical tensions and escalations. So here we had the higher inflation, geopolitical tensions and escalations weighing on risk assets. XRP sold off. XRP, just like the rest of the cryptocurrency market, has rekindled some of its losses. So we can assume that if the rest of the total cryptocurrency market cap is going to be risk on based off of those fundamental factors, XRP is going to follow suit and eventually rekindle all of its losses from its April downturn. So that means that we are going to target the April highs. All right. So these will be our take profit areas as traders. These will be nice dollar cost average areas for long-term bag holders that are just looking for appreciation based off of risk profile, right? Downwards momentum. If we see risk on market mood, your risk is lowered compared to the upside potential. So that would be scenario number one. If the total cryptocurrency market cap can break above $2.6 trillion and we can see a risk on market mood over the next consecutive couple of days, I would eventually assume that XRP would in some degree follow suit. Again, targeting these April highs. All right. That's my trade idea on total cryptocurrency market cap. If we see risk on this week and XRP. All right, hopefully that made sense. Now let's talk about the inverse, because this is the scenario that nobody wants to hear, but is still a reality and a possibility if it happens. Okay, so something that we all need to be taken into consideration. And this would be scenario number 2, a risk off market mood, right? This would be if we see upbeat figures indicating signs of economic expansion, right? The opposite of contraction, a healthy labor market, and an uptick or increase in inflation. This would push back the rate cut narrative. This would diminish the optimism in risk assets. This would strengthen, most likely, the dollar. As investors, these algorithms, these individuals with much more money than you and I start to price in, again, a higher interest rate for longer environment, right? Weighing on risk assets, to what degree, I'm not here to debate that. I just know that that scenario would most likely create a pullback, as investors with much more money than you and I would start to sell their positions and look for safer options in the now, okay, as traders, as investors, okay? So what I would be looking for if that scenario unfolds, which is a more risk off market rhetoric this week, caused by, again, upbeat US data, higher labor market figures, like stronger jobless claims, okay, and higher inflation readings. All right, an increase in both month over month and year over year core PCE figures would most likely create this scenario, right? So in a scenario like that unfolds, I would expect for us to range around these April highs. A failure to break above $2.6 trillion and engulf and create bullish momentum above the previous April high would most likely lead to, in a risk-off environment, a correction to some degree of this previous bullish move. Right? Depending on how risk averse the market gets, how risk off the market gets. Again, pull back 1 area of interest. If it continues down, pull back 2 area of interest. In worst case scenario, pull back 3 area of interest, where we just need to be monitoring, because again, zooming out, in my personal opinion, even if the market does pull back, it's still healthy. It's healthy for us to correct previous bullish moves, for us to reaccumulate orders to break higher. Okay. So if we do see a risk off market sentiment and we do see a market downturn, we're going to continue to capitalize on these dip buying opportunities. Anytime that the market discounts, again, to full circle this, how I started this call, where we talked about risk, taking educated risk, understanding the opportunity at hand. We here at CYPRX, when the market discounts, even if it discounts significantly further than this, like if we see a purge or something like that, we know the long-term potential of this space, and so should you. By doing research, by understanding what these banks and financial institutions are doing with the back-end financial system, changing it and swapping it all over to this new upgraded system on blockchain and distributed ledger technology, you should understand as well where this crypto market space is headed. All these tiny price fluctuations over the next 5 to 10 years are going to look like peanuts, because this market cap is going to look like a freaking hockey stick on the charts in the next 5 to 10 years. And if you can understand that, in the now, you can mature and you can capitalize on building a multi-6-figure portfolio now, while we can capitalize on these price fluctuations, okay? And you can come out on top. You can actually be a part of the 1%. Most people in crypto think they're part of the 1% because they own crypto, but in reality, they're not even going to make it. They're not even going to make it because they're not taking the necessary steps to come up against people like myself or other motivated individuals like Angelo in the community, who are taking action to actually build, to actually grow, to actually make money now, to not just wait around for wealth, and to actually take advantage of wealth creation now. Okay. So anyways, I hope that this video breakdown helped you all out. On XRP, real fast before we jump off, if that scenario happened and we did see a pullback, I don't think anything significant would take place on XRP. Most likely would just probably range back down to these lows at roughly around 49 to probably 47 cents. So if we saw a risk off market mood, total cryptocurrency market cap, we can't break above these highs on XRP at roughly around 56 to 55 cents. We're probably going to see a correction of this previous bullish move. Just like on the total cryptocurrency market cap, if XRP does come back down to these range lows, we're just going to be looking at that as buying opportunities, because eventually we're going to see a blow off top that nobody could ever even freaking imagine. All right. So many blessings to you guys. I hope that you all enjoyed this video breakdown. If you did, again, smash that thumbs up button. Make sure that you're following us on YouTube and on the X Space. Don't forget that tomorrow is our official hard release of the Wealth 28 Club DeFi University. You guys can visit CYPRXtrading.com to check that out. Get yourself educated. It's less than $1 a day. And people are already winning. People are already making money. People are already learning and growing, sharing the knowledge and education. With that being said, hope to see you guys again. Thank you all for tuning in. We do appreciate the love and the support, and I'll see you all in the next video.